All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. Let me go ahead and grab our bias chart and let's get this started. All right, view zoom. Okay, let's do this thing. Let's rock this pineapple. What? I don't know. Don't ask me. All right, so the euro dollar. Let's go back to yesterday's analysis. So yesterday we were here. And we were looking for a move up towards 114.50. 114.50, 114.60 is what we had written down as resistance. We went up to 114.45, and I'm short the euro right now at 114.20 average. I started selling it. I had orders to sell more at 114.55, which never got triggered. Matter of fact, let me go ahead and cancel that right now that I'm thinking about it. Sell, cancel that order. Okay, so I canceled my order to sell. I had an order to sell right here at 114.55. Never got to it. I started selling ahead of that. Unfortunately, I'm only short a half size position, which, yeah, well, I mean, it's better than a swift kick in the ass, right? That's it. I mean, it's not. Hold on, what the fudge? Okay, there we go. Sorry, I had to check something out. So, it's better than, it's better than being long, I guess. So it did exactly what we thought it was going to do, minus, plus or minus 10 pips. Here's the thing, all right? You might be asking, well, hey Blake, you're gonna cover your trade and take 30 pips off the table? The answer to that question is no. And now you might ask, well, why? Well, the reason why is I have to go default back over to the weekly chart, and let's remove these fibs, and I can redraw them here. It takes me just a second to redraw all those. I'm going to take you back to this weekly candle. Tell me, you look at that weekly candle and tell me how bullish that weekly candle is. It's not, right? It is not bullish. It's actually, on the contrary, quite bearish. Carney is speaking. Okay, thank you. We'll be watching the cable closely. So I wanted to sell into strength. So we got that strength, the last couple of days, and we've reversed. Now, not necessarily reversed. We've just, got a little bit of a pullback. I'm looking for Carney comments, by the way. Shoot, hold on. Let me delete this. Growth is decelerating again, he says. Of course, he's going to say some dovish stuff. Now, but inflation should pick up over the next year. All right. So dovish, but still has a little bit of a bullish slant. All right. Anyway, in the euro dollar, key support is going to be right here. So the low is 113.58. So I'm going to actually write down that number. Now, this is critical support for a few reasons. The first reason is this is a 618 retracement of this move, right? It's a 618 right there. We right there. We have this upsloping trend line that if it breaks, not going to be good. Right? From the spike low right over here following the, I think that was the FOMC, or is it that was the Bank of England, sorry, that was the BOE, or was that, hold on. No, that was the FOMC, that was the bank, that was the ECB, FOMC, okay. Or whatever, whichever one's which, I forget which one's which, that doesn't really matter. It's just one of the central bank meetings. Anyway, the 24% retracement, oops, of the very low, sorry, I have to go to the very, very low. I have to keep going. There we go. Okay, let's get right to it. There we go. All right, so the 24% retracement comes in right at the same spot. So what that means to us is if we break this 113.60, we are going in probably a pretty fail swoop to 113, hopefully down to 112 is what I'm hoping. Okay, so this is going to be a pretty aggressive move should we break below that support. I'm going to say it again. I doubt we're going to break through that support today. I doubt we're going to do it. We're going to need the data from tomorrow in order to do that. Okay. Damn, this crude oil is so freaking bearish or bullish. It's pissing me off. Yeah, it's just crazy, crazy bullish crude. Anyway, not necessarily crazy bullish, is just crazy strong is I guess the right terminology I should use. Recent weakness reflects upcoming referendum. Inflation seemed picking up over next year. That's all Carney's comments. All right, so will we break through there? I doubt it. Now, I cannot rule out, and we cannot rule out another bounce to 114.50 today. Okay? And if we get a move to 114.50, expect sellers like me to be sitting out there. Or on 14.50, I'll just put 60 like we had yesterday. Okay? Range. Let's go over to the cable. So regarding the pound, and Carney is speaking, recent FX moves suggest sharp fall in sterling in case of Brexit. So Carney's basically saying because of the Brexit, because of a possible Brexit, the pound has suffered as a result. Okay. Do you know what Carney's middle name is? He has a middle name. Captain friggin' Obvious. It's Captain. No shit, Sherlock. Really? Thank you. Thank you for that. Thank you for that entertaining dialogue about the sterling. Yes, that is the reason why the sterling has been so weak in recent months. Thank you. Thank you. All right. So there's the pound. Now, what do we do with the cable here? I don't know. I mean, I'm long the pound against the New Zealand. I'm long the pound against the euro. But as far as the pound dollar goes, I don't know, man. I don't know. Okay. I assume, just like yesterday, that if we get a rally back up towards this 145.25, I think is what we had as resistance. Sorry. And then 145.75. Those are all both going to be levels of resistance. So let's just assume that 45.25, 145.75, just in case we get up there. I doubt we're going to get up there, but just in case we get up there, it's resistance. Support for the cable in case the good old rug pull happens. That will be 143.75 again, just in case. That's going to be pretty key support. There are limits to what monetary policy can deliver after a Brexit. So in other words, he's saying, if there's a Brexit, my hands are tied because I can only do so much. It's a good interpretation, right? Monetary policy can't immediately offset the effects of a shock from a Brexit. So in other words, I don't have any answers to our problems. What the fudge sickle is happening with crude? Crude's just super strong, man. Crude's just ripping again. It's keeping the Canadian peso and Norwegian krona suppressed. Okay, let's go over to the Swissy. So yesterday, the dollar Swiss came down to 97. Stopped on a dime, and I only slept 4 hours last night. I told you guys that my son's My son did lose. My oldest son, his baseball team lost last night, so we were out of the playoffs for my oldest son. As anticipated, but I didn't get home till 10 o'clock last night, and I got up at 2:30 this morning. So I'm going to be a little tired a little later today. So what we have here is a failure to communicate. What we have here is we're retesting the broken trend line once again, but what's more important, well, we're at this 24% retracement. Actually, I need to keep that, but let's move this over a little bit because I need that spike. Okay. So there's your 24% retracement. If you take that spike low from right there, that one, $618. That is important support. That comes in at 96.85. 96.85. 96.85. Important support. 96.85. Important support. Crew just on fire. Resistance for this pussy. Now, this downtrend line, it's going to coincide with this resistance right here on a horizontal basis. So that means this is pretty significant today. It comes in at 97 and that comes in at 97.25. I know it's really close, so I'm going to put in 97.25, 98. Okay. Range. Let me yawn. Like I said, I'm sorry. I don't mean to yawn on you guys. I will be yawning a lot today, so just get used to it. It's not that you're boring me. Well, maybe you are. You guys are all sitting at home trading the markets in front of your computers. You are probably some of the most boring, least interesting people on the face of the planet. Don't worry, I am too. That makes us all very boring and uninteresting together, so therefore, if I'm yawning, it might be a result of all of this. Joe says we all have common values. You know, my wife, her office is in disarray at the house because she's been doing this Mother's Day thing for her company. So she did her conference call on Tuesday from my office, and she did it from my desk. And she's like, "Oh my God, I feel like I'm in a radiation therapy room with all the monitors and everything." I'm like, "Yeah, I've actually grown a tumor. Like I've grown like a second thumb on my right hand, and I got four pinky fingers on my left hand, which is really weird. So I'm gonna do with these excessive monitors I sit in front of all day." Thomas said, "Thanks for the praise, Blake." You guys are all great people. I'm just joking. I know you guys are all very interesting, very interesting people. Bunch of hermits in front of your computers. Like I said, I am too. We all keep good company. All right, let's go back. Let's get into the markets again. Sorry, I'm tired. See, when I'm tired, I start talking about gibberish and, you know. All right, here's the dollar yen. Look how strong the dollar yen is. What? Yeah. What? Mm-hmm. Equities are ripping. Dollar yen is threatening. You know, we break above this 109.50 and this thing's going to squeeze. And if this squeezes, the dollar's going higher. Don't forget what I said the last couple of days. The dollar yen took down the dollar index. When the dollar yen went from 121 to 105, it took down the dollar index. What do you think happens if the dollar yen goes from 109 back to 115? It's going to take up the dollar index with it. So, go euro. It's your birthday. Go euro. It's your birthday. Na 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 na. It's your birthday. Na 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 na. It's your birthday. All right, so 109.50, mega resistance, support now. I was wrong here. There we go. 108.25. Okay, 108.25. We're in a range. Tell you guys, we're going to threaten to turn bullish soon in the dollar yen. Not like soon. We're still in a range, but you know, we start breaking above like this 111, I'm going to have to flip it to bullish for a little bit. Because we may like start resuming this uptrend. Okay? Just for what it's worth. And I don't have any dollar yen exposure. Just talking. All right. Let's go over to dollar Canadian, right? So Luca just said something about the dollar Canadian, which is 100% true. Luca says the dollar Canadian's caught between strong dollar and strong oil. That is very well put, and you're exactly right. All right. So here's the thing about the dollar Canadian. If you guys are coming in a little bit late, you didn't hear my comments from earlier. I'm long the dollar Canadian. I'm long at 128.80. All right. I own it. I am down a little bit. And the one thing that I have to point out is the same thing that Polly pointed out this morning. If you weren't here before I got here, when Polly was here, Polly said that, and I 100% agree, the dollar Canadian is holding up very well despite the crude oil strength. And there's something to be said for that. I have been expecting, and I'm sure everybody else and their mothers, brothers, uncles, other mothers, brothers, uncles, monkeys, nephews, baby, has been expecting a move back down to 127.50 to get long. We came out of a descending wedge. My target is 133, basically, 132.80 or whatever, right here, where my cursor is. That's my target, at least, at minimum. So, as I had explained to you, like the last couple of days, I was looking to buy a dip, and I'm looking to buy a dip towards 127.50 to get long. I already started to nibble my way in, just like I nibbled the euro dollar short as well. If we get down to 127.50, I'm going to be aggressively buying the dollar Canadian, just to let you all know. Now, the comment or the question that we all have now, are we even going to make it there? Because if crude oil stops and reverses, let's say we just push stops above the highs, just enough in crude oil to trip stops, okay, above the highs, and let's say we start coming down now. If that happens, this dollar Canadian is probably going to rally significantly, and so I'm gonna write that this 129 right here is significant resistance. Support, I'm going to write down at 128 because 128 is the 38% retracement. 127.50 is the breakout point. So we have support at 127.50, 128. Resistance right now is at 129. Okay. We're in a range environment, but above 130, we're going to turn bullish near term. Okay. This dollar Canadian, you got to watch it closely because, like I said, if crude oil starts to make a move lower, this dollar Canadian is going to start rallying. All right, the pullback has been very minor here. Let's get rid of this stuff from yesterday. I'd really prefer a move down to 127.50 because this way you would crack the support through here, right? You crack support through there, get everybody short. Everybody goes, oh, the head and shoulder pattern. Head and shoulder pattern while you're at the bottom of a trend, which is very wrong to do. But then you'll get all the newbies, head and shoulder pattern. Let them get in, let them get short, then we get long as they get short. See, remember yesterday we had a conversation about the professionals taking advantage of new traders? That is a perfect way to take advantage of new traders. But Blake, it's a head and shoulder pattern. It's a head and shoulder pattern. Yeah, yeah, we don't look for head and shoulder patterns when we're in a downtrend. We only look for head and shoulder patterns when we're in an uptrend. So all those new traders try to get short right here. We're going to squeeze them. We're going to get on the other side of that, and we're going to get long, balls long, and then drive it higher. Got it? Good. All right. What was I doing? What was I saying? Oh, dollar Canadian. Let's do the Kiwi really quick. So, uh, uh, um, James goes, why is the Kiwi so strong? It's still the financial stability report that has really had the Kiwi holding up. I am short the New Zealand dollar. My cost average in the New Zealand dollar short is right here at 68.12. I've been short since yesterday. I did not get stopped out. I figured we wouldn't make it higher than the 68.55, but it has been a little frustrating. We still have this double top, a little false breakdown here, trying to push around a little bit, but I'm more bearish the Kiwi, not necessarily because it's, well, I'm always bearish the Kiwi. I'm pretty much always bearish the Kiwi at these prices. Well, you know, when the Kiwi dollar gets down to like 55 cents or so, I'll stop being so bearish the Kiwi. But I'm bearish the Kiwi, just so you all know. And I will continue. I think the New Zealand dollar has not priced in China yet, just so we're all clear. Okay, it hasn't priced in China like the Aussie has, and that's why I'm bullish the Aussie New Zealand, and you know, anyway, I can go on and on and on. But the Kiwi dollar, the financial stability report really pushed back up the Kiwi. I think, you know, New Zealand, the one thing that the RBNZ right now is really worried about is property prices. You know, the property prices are really high, and you've got this influx of Chinese buyers, and prices are very elevated. And if you keep lowering rates, then it's just adding fuel to the fire to the property bubble, and they're really worried about that. But then they have other issues too. You know, you got the economy starting to slow down. You know, as China's importing less New Zealand goods, as China's, you know, New Zealand's largest exporter or importer, excuse me, of New Zealand goods. You've got the economy that's slowing, but you still got a very, very hot housing market. So you know, RBNZ is in a little bit of a pickle. You know, because you got money, outsider money coming in and buying New Zealand property, a lot of Chinese money. So again, that's the pickle that the RBNZ is in. But I think the weakness of the economy is going to, the weakness of the New Zealand economy is eventually going to rule over rates, and so they're going to be forced to continue to lower rates to compensate for a weaker New Zealand economy, in my opinion, eventually. That's more of an eventuality. So that's why I continue to stay short the Kiwi, and I try to sell rallies. Now, as long as we stay below the 68 50, 68.60. I'm not worried about being on the short side here. I'm short right here, just so you all know. It's not like I've got like some great price. I'm short at 68.12. All right. I've just been sitting in it, but that's resistance right now. We need to push back down here to get back in that bearish trend. We still have a gap to be filled down here at 67.60. I'm going to write that down. That was following the financial stability report. Probably is about a 50% retracement. It's actually a 618 down here. So that's going to be pretty good support on the way down. But I'm short the Kiwi because I like being short the Kiwi, but I'm actually bullish the dollar, as you guys know. All right. Okay. Put you guys on hold. I'm going to go get some more coffee. Be back in a few moments. Cheers, everyone. Hi, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. We're going to finish up with our analysis. Kiwi's new lows. Good. Dump Kiwi. Dump. Euro dollars closing in on that support. We're at 113.80. Well, let's continue on. We got stuff we got to do. So let's go over to the Aussie. So here's the Aussie dollar. The Aussie, this is a great sucker play. Just a great sucker play. We got to 74 cents, and I warned you guys yesterday that if we failed here, this is going to be a continuation pattern. This is a continuation pattern. So this is one of those, you know, suckered a lot of people in. You know, this Aussie right here suckered a lot of people in here. And this is a potential continuation pattern. So 73 cents is going to be very important support. We break through that, there's going to be a lot of stops below there. Okay. Excuse me. Oh my gosh. I don't know what that was drawn as, but there we go. All right. We're basically hovering around the 50% retracement, so below 73 cents is going to open up a whole whirlwind of crap for the Aussie. That is key support. Resistance right now is 74 cents. I think anybody who's long the Aussie just hopes we get back to 74 cents so they can exit. Actually, we're in a range, but threatening to turn on some of these. Okay, let's go over to the dollar index. Crude's coming off too, by the way. Okay, here's the dollar index. We were looking for a dip in the dollar index, nothing doing. Let's delete some of this stuff. Just give me a second to. I'm gonna do a little work here, so just give me a second. Okay, let's stop there for a moment. This 200 period moving average on this 4-hour chart, you know, you guys know I don't like moving averages. For those of you that listen in here every day know that I'm not a big fan. Moving averages are like, you know, it's like going to a bowling alley. You know, you go to a bowling alley and you don't have bowling shoes, right? So you're like, well, give me size, you know, give me size 11 shoes. You know, they give you a size 11 shoe. You can't go into a bowling alley and just say, give me bowling shoes. You know, every foot is different. no, every foot's different. You have certain shoes for certain, certain occasions, and even if you have a bunch of the same shoe, you can't use it. And I won't wear my bowling shoes out to dinner at a black tie event. Well, maybe some of you might, but I wouldn't. The moving averages are the same way. It's like you use certain moving averages on certain instruments, and then some instruments it just doesn't work. So that's why I tend not to put too many moving averages on my screen. I usually use them for momentum. Okay, that one doesn't matter. Let's delete that. This 200 period moving average though seems to be pretty sticky right here. Let's see how deep of a pullback this has been with it's only been a 24% pullback. That's pretty, that right there in itself, being that that was only a 24% pullback, is pretty bullish for the dollar if we rally into new highs. So if we break 94.40, that's going to be extremely bullish for the dollar. Just telling you guys. Okay. Oh, this dollar Canadian's so weak. So weak. Support right now is 93, let's just call it 93.70, roughly. What's the low here? 93.68, so 93.70. It's not great support, but okay. All right, let's go take a look at the peso. So the peso, due to strong risk appetite, we rallied to 18, pulled back overnight. We had this Gartley pattern, played yesterday. I know a couple people got long. I'm still actually, I bought the peso, I sold it. I bought a little bit, I have a very small position in the peso. Support right now, it's kind of a messy chart, so let's get rid of this stuff. Okay, support right now is going to be right here. Get rid of this. Okay. Dollar Canadian, new lows. Dollar Canadian is just so weak. Can't get out of its own way. 128.10, guys. It's coming up. Okay. Peso should have some support at 1781. Resistance right now is well, I'm going to write down 1781 for sure. No, I was going to draw a trend line through there, but I can't. It's not really, it doesn't make much sense. I was going to draw that, but that's just not going to help us, I don't think. I mean, I guess that means 1803, 1806 is resistance today. 0.06. Okay. Okay. Let's go over to the Norwegian krona. So the Norwegian krona GDP numbers came out last night out of Norway, and it was really strong. Market expected uh, monthly GDP to come in at 0.2%, or I'm sorry, quarterly GDP coming at 0.1%. It came in at 1%. It's 0.9% better than expected. So you can see why the Norwegian krona got slammed. Then on top of that, you got strong crude oil, so that pushed the Norwegian krona back down again. Now, this is, since we've come off of a pretty nice downtrend here, we could try to set up an inverted head and shoulder pattern, possibly, but that would mean that 107 has, or 807 has to hold. So, and with crude oil so strong, you can't rule out a move down to 807. Okay. Now, resistance for the Norwegian krona. We did not bounce here yesterday. So I want to write down 818 as resistance right now. 818. And we are in a range. Let's go over to the Swedish krona. Now the Swedish krona, I'm going to have to keep an eye on this one. We are really close to resistance, and I think it's, you know, the U.S. dollar Swedish krona, it could really break higher while the pound's coming back under pressure. This U.S. dollar Swedish krona could really take off if we break through 818. The dips have been very minor, and you should watch it really closely, because this is going to be more of a U.S. dollar bullish sign than anything if we really start to break higher. So, sorry, I'm just looking at the euro and the pound right now. Okay, hold on. I'll still write down support as being 807 and 818 here, so I'll just be done with it. All right, U.S. dollar Swedish krona. I'm gonna go back and look at the other 807 as well. Yeah, I guess it is 807. Oh, no way. Well, that doesn't happen often. 818, and this is major resistance. How often does that happen? The Canadian hit 120. Oh, Canadian's at 128.10 range. I bought a little bit more Canadian here. Thank you very much. Wow.